Good morning, everyone. Darius Dale here to present our macro minute for Monday, January 10th, 2022. Starting with markets, we have stocks flat to down this morning, commodities mixed, crypto down, dollar up small, global bond yields up. Big movers this morning. We have Bitcoin down 2%, Ethereum down 3%, nat gas up 5, VIX up 7. On the economic front, and focusing specifically on the Fed's maximum and inclusive mandate, Friday's December jobs report forced the Fed incrementally behind the curve. As such, investors should expect an uptick in hawkish rhetoric from upcoming Fed speak. So, looking at the U3 rate for workers for less than a high school diploma, that ticked down 30 basis points to 5.2%. That's the lowest print we've seen since September of 2019. So that's better than it was pre-pandemic. The U3 rate for workers with a high school diploma ticked down a full 60 basis points to 4.6%. That's the lowest print we've seen since March of 2020. The U3 rate for Hispanic or Latino workers ticked down 30 basis points to 4.9%. That's the lowest rate we've seen since February of 2020. And then bucking the trend, you had the U3 rate for African American workers that actually ticked up, moved in the wrong direction. But as you can see, generally positive from the perspective of that mandate. Wage pressures continue to build as labor supply continues to be constrained where it is needed most. So we saw the labor force participation rate for prime working age individuals, that's 25 to 54-year-olds, that was unchanged at 81.9%. There's been no improvement in that statistic since July. As such, we've seen average weekly earnings, those accelerated 130 basis points to 5.7% year over year. That's the highest sprint we've seen in a couple of months. More importantly, the fastest acceleration we've seen since January of 2021. So wage pressures are not only increasing, but they're increasing at a faster rate. With respect to today's probable range setups, you have overbought signal in the 10-year Boon yield, 10-year JGB yield, 10-year Swiss yield, 10-year gilt yield, 10-year Treasury yield, and 10-year TIPS yield. Also have an oversold signal in the S&P 500, the Nikkei 225, and US dollar versus the Canadian loonie. Taking it to the chart here, looking at the S&P 500 at the lower boundary of its probable range. So you would expect to see a bounce this week. If we don't see a bounce this week, we could be headed into a more material correction, much like what we saw in September. So just be aware that this would be the spot to start to cover shorts to the extent you're short and also sort of incrementally increase your long exposure. Again, what we're trying to do is make probabilistic bets. Nothing is for certain, but this would be a good spot to make one of those bets. Getting back to the probable ranges, WTI neutral VAMs minus 9% of downside versus 2% of upside. And so the Delta community won. I posed that question on Friday, what the levels of the deltas and the deltas won out. So Bloomberg Dollar Index neutral VAMs minus 0.5% of downside versus 1.1% of upside. 10-year Treasury yield minus 25 basis points of downside at the upper boundary of its probable range, remains bullish VAMs. Bitcoin bearish VAMs minus 6% of downside versus 14% of upside. It's down, 18% since we told you it moved to neutral on December 8th, minus 12% since we told you it broke down to bearish on December 29th. So pay attention. Ethereum down 30% since we told you it went to neutral on December 8th, 17%, down 17% since we told you it went to bearish on December 29th on this program. So that's got 4% of downside in its probable range versus 22% of upside. And then lastly, gold, still neutral VAMs, minus 1.7% of downside versus 2.2% of upside. So with that, Darius Dale presenting our macro minute for Monday, January 10th, 2022. Everyone, best of luck out there this week.